Everyone's now coming through from the waiting room. And so, welcome everyone to our market briefing session this afternoon. I just want to introduce myself. I know you've got two of us this afternoon. I'm Manveen, too, who I'm L&D manager at the MGA, and on behalf of the MGA, I'd like to welcome you to this market briefing with Cowbell and Charles Taylor. Just before we start, I'm just going to run through a couple of housekeeping points. Please do keep your microphone and camera off, just because it helps us, keep everyone in the room and any interruption to the session. We also ask that you don't use any AI note-taking tools, as we don't have permission to use this. So ideally, no using those in the background. But we do encourage you to ask questions. Please do add them into the chat. There'll also be an opportunity to ask questions at the end of the session. So please do get involved. This insight session is being recorded and a link will be sent to you post the event, as well as our feedback survey. So please do take some time to complete it. It doesn't take more than 2 minutes, but it will allow us to continue tailoring our sessions. And one final point is this market briefing session is accredited by the CII for the content and quality. So if this does align to your learning needs, you can add it onto your CPD log. So with all those housekeeping points out of the way, it allows me to introduce today's session and presenters. We've got Kirsten, Joseph and Simon today, who I'll hand over to get our session underway. Thank you all.
Fantastic. Thank you everyone for joining us. Looking forward to talking a little bit about some of the basics around business interruption. What happens when a cyber claim goes beyond the initial incident and how those considerations affect you and your insureds. My name is Simon. I am the Vice President of Enterprise Systems here at Cowbell. What that means is I was a little bit more broker facing than I am now, but still excited to be with you all today. Joe?
Hi everyone, and welcome. I'm Joe Prince, and I'm the head of Forensic Accounting Services at London, here in London, at Charles Taylor. I've got over 12 plus years of experience, particularly in business interruption, but including a number of different lines, one of which is cyber. I'll hand over to you, Kirsten.
Thank you, Joe. My name is Kirsten Mealy. I'm the Claims Director here at Cowbell for the UK and recently launched Australia. I've worked in insurance for just over 12 years, specialising in cyber for the past 7.
I should have probably mentioned I've been with Cowbell for about 5 years, so it's been a little bit of a journey. I started with the US side, came over to the UK when we launched here in 2024. As it was mentioned, this is an accredited session, so your learning objectives for today, you should hopefully be able to explain how business interruption coverage applies to the common cyber incidents and claims that you might see in a typical undertaking. You should be able to describe the typical process that claims professionals use when examining those business interruption losses. And 3, summarize some of the factors that affect calculation of business interruption and extra expense loss payments. And if you've got any questions at the end, obviously those are going to be welcome through the chat. And please also, if you have any feedback for us, please provide that to the MGAA on how we can make our session better. So we're just going to dive right in with a quick introduction to who Cowbell is. Cowbell is a cyber insurance provider. We started in the States in 2019. The mission was really to make cyber insurance more accessible to the SME space. We do now, of course, work with a number of different vetted panels when it comes to claims expertise, but also have our pre-claim services, including our risk engineering consultations, where we cover things such as IT control, cyber awareness training, our other resilience services that are either provided free or at discounted cost to our policy holders. We are a nationwide insurer in the UK, including the Isles of Guernsey and the Isle of Man. We do insure businesses up to an annual turnover of £1 billion, with fairly few ineligible classes on S&P A plus and A-rated paper. 5 million primary and excess limits are available. A couple of industries that we insure are listed on the right. And if you want to submit something to us, you can do so by submissions@cowbellcyber.ai. And I will pass on to Joe to talk a little bit about Charles Taylor.
Okay, perfect. Thank you, Simon. So quite a high level overview. So Charles Taylor, we have over 4,000 employees in over 30 different countries, and our main focus is assisting insurers in handling and processing claims. If you move on to the next slide, Simon. Perfect. So in terms of cyber, we've been assisting with cyber claims for over 9 years now in various different locations. We have adjusters and forensic accountants who have dealt with ransomware to major global breaches, and we have a range of expertise in various industries, including healthcare, education, you name it. We've probably had a claim on it, and so we'll work through that. Our team, we have extensive experiences in business interruption claims, both contingent and third party. And we have worked with big companies, big corporates to SMEs in various, as I said, various industries. And we have worked in various locations as well. And we also have multilingual adjusters and forensic accountants.
All right, which brings us to our first question of the day. Have you, you being an attendee of our webinar, experienced a cyber claim which had a business interruption loss? And I believe our MGA folks are going to launch that poll for you. If you've experienced one that had BI, please click on the yes. If you haven't, please click on the no. And if you're not sure, there is a not sure option. Looks like the majority so far are saying no. That's interesting. Some about 60%, if I'm doing my maths right, 66% are saying nope, not had a cyber claim that had a business interruption loss. Not all cyber claims will have a business interruption loss, which is the fact. Not all of them will, but some of them do, especially those ones that have manufacturing exposures. And we'll talk a little bit about more specifics. But let's move into what business interruption actually is. And I'm going to go ahead and make a copy of these results for later. Kristen, would you like to go ahead?
Thank you, Simon. So interestingly, if a lot of people haven't experienced a business interruption loss as it pertains to cyber, as Simon rightly said, not every single cyber event does have a business interruption loss. We do see quite frequently the large volume of claims that happen within the cyber industry tend to be your sort of business email compromises or fraudulent funds transfers, where funds have been misdirected to an unintended third party. I would say 9 times out of 10, they wouldn't see a business interruption loss. It'd be quite unlikely to see that from there. But what we do see more often is your larger, more ransomware type events or DDoS attacks, where a threat actor has put malicious software or malware into an insurer's environment that has rendered some parts of their systems either inoperable or just sort of not working to their full functionality. So we do see this mainly when it pertains to ransomwares. And if that does come in, this is a sort of brief diagram as to how that can potentially look. So income loss and extra expense, which we'll go to further explain what those two buckets look like as we go down the presentation. But we've got income loss and income loss and extra expenses, sorry, which is actual and measurable interruption of a computer system. So if a company does suffer a intrusion of their network, which renders certain software or certain systems not operational for a period of time, that could massively impact their revenue. So if you're a company who uses POS systems, if you use a booking system, etc., and customers or clients aren't able to use that software, then unfortunately that does lead to an income loss to the business. And that's what we're looking to adjust in relation to a cyber event. So that can either be direct, so that is our policyholders' own systems that has been affected, or it could be a third party that we rely upon, which is that contingent element, that arm there. So if you're using a third party IT software or provider of some sort for your POS systems, for your booking platform, for any of that sort, that is the contingent piece as compared to the direct. And all of that would fall within coverage under the cyber policy with Cowbell, which would be adjusted at the time. But this is a kind of brief diagram to show how that all looks in terms of business interruption loss and how that would come around related to a cyber event.
What's really important is that, like a lot of cyber policies, there is difference between forms and variations by insurer. So when you're looking at the form that you're insuring with. Often cases, the direct and contingent pieces will be separate clauses. Not always, again, but you want to see where those clauses are in the policy. There's oftentimes a question of whether or not system failure is or is not covered. System failure would be something that involves a error or omission by the insured themselves that caused the system to go down, as opposed to an outside threat actor causing it. Voluntary shutdown inclusion will also vary. This is where if shutdown of systems is required or deemed necessary to prevent further damage or further spread of a threat actor, the business income loss from that voluntary shutdown may or may not be covered. Sublimits can often apply, particularly with regard to contingent business interruption. And so you want to make sure that if you're looking at the limit for business interruption, what is that limit for direct versus contingent, if there is one? What is the limit of indemnity? Typically, it's going to be adjusted on that loss sustained basis, but within a limit of restoration period, and that will vary again from insurer to insurer. And the wordings are very important. The way that each insurer defines business interruption, defines service provider, defines a computer system can vary. And so while we are moving towards more insurers covering typically the same pieces, and for the bulk of it, you're going to find more similarities than you are differences. There may be some of those edge cases where you want to just check the wording before you move on to make sure that it's got the right cover for your insured, particularly.
Perfect. As Simon rightly said, in terms of policies, they will vary from insurer to insurer alongside the sort of wording. But I'd say that for the majority of policies that we see across the market, the differentiation between business interruption and additional expense, extra expense, are separated into two different insuring clauses. So just want to call out what those really pertain to and what they actually mean. Your business interruption loss, put quite simply, is the actual loss of income that a business has suffered. So like we said earlier, if there's some systems that are rendered inoperable for a period of time, that's a direct loss of income to the company. And then you have your additional expense. So have you had to incur any additional costs either from external IT providers to get the system back up and running, or is there any other cost that we can consider there? By way of example, we are sort of looking at a ransomware incident that has affected a manufacturer. Let's just say that they've been down for 2 weeks, their whole system has been rendered inoperable for a period of 2 weeks. That portion would be your actual direct loss of income, your business interruption losses. Now, let's just say that they have certain contracts in place where they have to meet deadlines for certain work. Maybe they have deadlines in terms of staffing, etc., where they actually contractually are obliged to carry out those duties, or they do already have third parties in place where they can outsource some work so that they aren't sort of losing that ability to be able to conduct the business that they usually would, but there's an additional expense there of having to outsource or contract certain work. That would then be considered an additional expense or extra expense, depending on how the policy is worded. That can also include things like overtime, having to rent out temporary equipment to make sure the business can operate for a period of time, or data re-entry. So unfortunately, in some circumstances, if a ransomware event, there might not be viable backups, or if there are, they might be a couple of weeks old, and the business could potentially lose a couple of weeks of data that would otherwise help them throughout their normal course of business. And if they maybe have paper copies or something else elsewhere, we can either employ a third party to come in and do data entry for them, or they can sort of pay their employees additional funds or get contracted staff in as well. So those are the kind of general terms of extra expense. Of course, each circumstance of claim would warrant something potentially different, but those are sort of high level what we would typically see. Moving on to the BI claim process, so I'll kick off with what we do here at Cowbell, and then I'll hand over to Joe to speak to the forensic accountant side of things. So when a claim does come into us, like I said, we don't typically see business interruption losses arising from business email compromises or fraudulent funds transfers. They largely are pertaining to ransomware or DDoS attack, or some kind of incident that has actually affected the insured's network. So if we do get a notification through for, let's just say, a ransomware claim, we are knowing that it's quite likely that there probably is going to be some form of business interruption loss there. We would then look to kind of gather that initial information from our policyholder during our initial scoping call. So we would like to understand what systems have been affected, how is that correlating to your revenue and your income? Are there any manual workarounds that you can do to still generate that income and mitigate some of that loss? So even if you can't get to full functionalities, there's something that we can do that it's not a complete hard down, full stop loss of revenue. And we would try and work with our policyholder to establish that in the first instance. But of course, our main priority in those sorts of circumstances is to make sure the insured is back up and running, they're in a safe and clean environment. That is our first and foremost priority. So we would then look to, once everything's back in place, once the insured are in a good position and we're starting to do a forensics piece, which is really investigating what has actually happened, what did the threat actor do while they were in the environment. That's then a little bit of a calmer period for us to go back to our policyholders and start to talk about, okay, we're now back up and running. Let's try and look at what happened here in this business interruption period. And that's when we would bring in the likes of Joe and his team at Charles Taylor to review the business interruption adjustment.
That leads not very nicely on, Kirsten, to what we do then and our process really. So the first approach that we like to do is either have a call or to meet with the insured to understand their business and what potential documents are available. Once we've had that call, we'll talk about the kind of business overview shortly. But then we'd issue a document request list, and depending on how much information we've gathered from that call or that meeting, we might ask some questions on the business overview. We'd also ask for a claim. We'd ask for some financial information, which could include things like the profit and loss account, sales, and that might be on a monthly basis or possibly daily, with some prior year information there as well. Subject to the insured, if there's a production, we might ask for production company, we might ask for some production information. And then also any support for any extra expenses, so things, invoices, and any potential details of any savings. Once we've submitted that document request list to the insured, we would hope to receive a response, be it piecemeal basis or when they're available to give us some information. And then we'll review that information that's provided to us and analyze that. If we've got enough information, we might be in a position then to kind of conclude the claim, but typically the process, we'd kind of repeat the process where we might go back, have a call or meeting with the insured to run through the documents they provided or run through our analysis, and we might require some further information or further document requests based on those discussions or based on the information provided. Once we've kind of gone through those or that round and we're in a position where we have enough information, we'll then report to Kirsten. Throughout this process, we'll be keeping her up to date anyway, but we'll report to insurers or Kirsten and Cowbell team about our where we're at and what in terms of quantum. Kirsten, what would you then do with our report or kind of our report?
Of course. So we would look, yeah, thank you, Joe. We would look over your considerations, your analysis, your adjustment, and we would review that in line with the policy language. So there might be portions of that additional expense that we have to consider. There might be portions that are pure BI, or there might be some considerations which unfortunately wouldn't fall for coverage under the policy. So before we communicate anything to our insured, we would make sure that everything that we've reviewed, we understand what falls in line with the policy. If there's any questions that we have, we would go back to Joe and his team to fully understand certain aspects. Equally, if we have any questions around how did we get to this calculation, etc., just so that we fully understand, because each industry that we work with operates slightly differently. There might be seasonal periods of time where there's a massive uptake in income or like that drops as well. So we want to be able to fully understand the actual business themselves and what that claim pertains to. Once we're happy with that information, we would look to hold a call with the insured where we run through, okay, this is what with Joe and his team as well, we would run through with the insured, here's what we've done in our adjustment and our analysis, here's the figures that we've come out to. Is this what in line with what you were expecting? Do you have any questions? And we would work directly with our brokers and our policyholders in that regard to make sure there's no element that we've missed or misunderstood. And then once they're happy with that, we would then go ahead and make the settlement.
think you touched upon there, Kirsten, the business kind of overview and understanding the business. And I think for us, that is the most important thing, really, is to understand the insurance business and how whatever they do, the activity they do relates to the income that they generate, and the costs of the business. I think at the end of the day, the insured knows the business better than anyone. And so we're reliant on them to give us information to enable us to understand the business. So we want to understand the normal trading, the locations, the revenue streams, and the costs of that business. And then we want to understand the impact of the incident on that revenue streams. Has it affected the normal trading completely, or is it a full or partial closure? Or is there only certain functions or systems that are affected? As well as that, there might be some mitigation that they can do. Have they mitigated any of those revenue losses? Has that incurred additional cost or extra expense? I think we need to understand the timeline of events. So when did it happen, and when were the resumption of operations, or when was the restoration period? When does that end?
And we've got a couple of examples now. Obviously, we've heard of a few high-profile retail ones, Kirsten. So what would you say retailers need to be concerned about?
Of course. So Joe has very kindly put together a real life example of a cyber claim and how everything sort of materialised. But just in terms of a retail business, of course, this particular time of year is peak for revenue periods, but it's also peak for threat actors to initiate attacks because they know that it's the maximum amount of damage that they can do to a business. So when we are speaking to policyholders or even our brokers in the market, we are very cognizant of the fact that the seasonal risks are quite high for a retail business. So things like Black Friday, Christmas, Easter, any time of big sale event or something going on, we're making sure that our insureds and our brokers are very well aware of what's going on in those periods of time, the fact that they are much more prevalent to attacks, and what they can potentially do to help mitigate and protect themselves. Aside from that, we've also got some factors here that we consider related to retail businesses. So protecting consumer data. I think we've certainly seen a shift in MO from the threat actors of recent years, is that they might not always be able to get into a system fully to encrypt a network, an actual system, etc. But what they can actually do and what they realise is that there's a large amount of value in consumer data. They know that it would cause mass destruction to a company to have to notify individuals, notify the ICO, potentially have sort of newswide media outlets reporting on it, as we've seen across the course of this year. So protecting consumer data is a massive consideration that we make sure all of our retail customers are aware of. So having things like multi-factor authentication, data encryption, data purging policies, and employee training, particularly on phishing. I'd say 9 times out of 10, what we see from these types of incidents is actually an employee has clicked on a malicious link or has somehow opened a malicious email that's then allowed a threat actor into their system, and they're then able to take data from even their email accounts, some emails that are passing back and forward, or somehow have a backdoor into the system to then sort of download data. Equally, in dealing with retail businesses, you have an added element of PCI protection. So when retailers are using sort of checkout pages on their website or POS systems, which is the sort of card machine that you would use in store, we have unfortunately seen a number of instances where these have been affected, and therefore card numbers, etc., have been taken, and unfortunately then customers are potentially charged fraudulently, and we see that then come back to our ultimate insured for reclaiming those costs. So that's an element as well. We recommend that they use reputable providers, have segmented payment systems, and ensure there's monitoring for suspicious activity. You can never be 100% foolproof, but making sure that you check these elements is quite critical. And then finally, third-party dependencies. For a lot of retail businesses, they will rely upon third-party systems such as e-commerce platforms, payment gateways, things like Stripe or PayPal, etc., different IT providers, couriers, even the likes of Royal Mail, etc. If something happens to your delivery service, you're then ultimately not able to deliver on your goods, and that ultimately affects your own brand and reputation. So these are all considerations to make. One thing that we say, if one goes down, then you're down.
Yeah, I think especially this year with Marks and Spencers being all over the news, other big ones including Co-op. I think the third party threat actors or third party services is quite key. To be honest, this example though is an example that I've worked in the past. It's a retailer in Italy that predominantly sells clothes online, and they suffered a hack prior to one of their big sale weekends in Easter. So it happened on the 23rd of March 2023, and it wasn't discovered until the 6th of April, a day before Good Friday, and it was a card skimming script that was injected by the hackers on the Insureds server that allowed them to copy payment details of customers. Around 2,500 customers appeared to be affected by the intrusion, and after an investigation was launched and a local regulator was notified. Subsequently to that, they actually had continued attacks, and so the site was shut down. And I think if we move on to the next page, we can see graphically what's happened here. So you can see here the solid black line there is the actual, and you can see the dashed line there is the equivalent period in the prior year. And you can see prior to the incident, actually the solid line was trending above the prior year, quite a lot of growth. In fact, it looks like it was trending in the weekdays higher than the prior year, but weekends maybe only a little bit. But you can see in the solid line up until that blue area there that there's a sudden drop off where they've switched off their website to avoid any further attacks. Based on that information, that correlation, you can see actually in the loss period there, so the period where it's shut off, the prior year, that dashed line is actually peaked, which represents the Easter weekend. And then following the incident, if you look at the solid black line again, it actually doesn't return back up till higher than the prior year until the end of this graph, the end of May there, which is suggesting that actually sales didn't come back up to where they should have been up until the end of May. Maybe that's through customer confidence in them, or maybe that's due to ongoing system issues.
When I first saw this graph, I honestly thought I thought it was wrong. I thought there was an error here. I didn't realize that this was just a giant drop to zero for a very long time before it comes back up. Kind of looks like, a kid just drew off the page, right? And yeah, it's a dramatic view of just how much they were impacted over what was meant to be their biggest weekend.
Yeah. I think that's one of the big issues, and actually this is Black Friday week, so it's really right to talk about this issue. It's prime targets at these sort of big peak sale periods. If we move on then, so in summary, what happened in this? So they actually made a decision to host their website elsewhere because they couldn't get rid of that malicious script. They, as you saw in the prior graph, whatever, we used the prior year actually and applied an uplift to project or to trend the nature of the sales to estimate what they would have lost. And we did discuss things with the insured. Could they have launched a sale outside the key period? Would that have worked if they didn't launch it on Easter but launched it a couple of weeks later? Could they have used retail stores and launched a bigger sale through there? But in the end, we discussed these ideas, but they didn't actually come to fruition as it was deemed that it wouldn't work. If Kirsten or Simon, anything else to add in terms of retail?
Yeah, I think we've covered off most of the kind of key considerations and how an incident can really impact them, particularly around this time of year, which is, like you say, a key time to be discussing it. Of course, if there's questions, we're happy to take them at the end, either pertaining to these sectors of business or these claims examples in more general terms. Perfect. And before we move on to our second claims example, which is focusing on manufacturing, we do just have, again, some key considerations for that industry in particular. So the first two sections here at the top relating to halts in production and third-party dependencies really go hand in hand. So your halt in production is more your direct, so that's our insured's personal systems. Third-party dependencies, is more that element, excuse me, of indirect, where an insured relies upon third-party systems. So within the field of manufacturing, we see that as MSPs, cloud ERPs, logistic platforms, critical vendors, single points of external failure. As we said previously, if they go down, you're down. That all leads to a halt in production, whether it's direct, excuse me, sorry, whether it's direct or through a third party. So some of the key considerations that we, excuse me, sorry, the key considerations that we would ask within manufacturing businesses are, what are some of your manual workarounds? If a system does go down in some particular manner, do you have a way to still operate? So is there some form of offline system that you can use, or some kind of manual pen and paper, something along that line that can help you continue those business operations during that period of time? Contractual obligations as well, like we said in the previous example, if a manufacturing business has certain deadlines or contractual obligations that they have to meet, that is a big concern for us as an insurer. We want to make sure that the insured gets back up and running as quickly as possible, is able to fulfill that contractual obligation. And if not, what can we potentially do to assist them, either by resourcing elsewhere to that sort of extra expense element? Is there anything that we can do to pass that over to a contractor to be able to fulfill that for them? Or is there anything else that they can do internally to be able to fulfill those deadlines for certain projects? And finally, I think what's quite interesting is bespoke hardware damage. So just sort of relating to a claim that I've personally had in my experience, we had a claim for a window manufacturer who made window panes for traditional windows, doors, etc. They actually had bespoke machinery which made certain designs upon their windows, which was one of their main USPs and what they sort of marketed largely within their industry. Unfortunately, as a result of the incident, for some particular reason, this machine was ultimately condemned. It was no longer possible to move forward, and they had years of data stored in there for different designs that they had worked up. And that can be quite kind of costly to potentially have to redo all of that work or to repurchase that machinery. So again, if there's any sort of manual workarounds or just a policyholder being made aware of costs to potentially replace those systems or ways to remediate as well. Just some key considerations there.
So in terms of an example that we've seen, so here we've got a packaging manufacturer that specializes in producing drinks cartons. Their factory is fully automated and they suffered a ransomware attack on the 15th of December. They have specialized equipment similar to what Kirsten was just talking about, where they use non-toxic inks on packaging. The outage lasts 2 weeks. So if you can see from the 15th of December, we're talking about the Christmas week period as well there, during which no packaging could be produced. They manufacture quantities to order, but they have a slight delay on the lead time, so they don't actually produce directly to sell. And as such, the insured did manage to make up some of their production in February, but incurred significant overtime at extra cost. So I believe we have a poll now, what we discussed in terms of what would happen, or what do you think would happen if the bespoke machinery was irreparable? We've got there, it would be an expensive replacement. We've got longer period of interruption, increase of potential business interruption, or all of the above.
I always get tricked when I see a question that says all of the above, because I feel like, should I answer that one? And yeah, I think what we're looking at is most people are saying, yep, all of the above. What do you think, Joe?
Yeah, no, exactly. I think we've got the majority of the responses there. Yes, I think it's all of the above. So you're talking about a potential expensive replacement if they can't get that to fix. Exactly as per Kirsten's example, which then in turn might lead to a longer period of interruption depending on the delay of that equipment. And if they can't find any work around that is going to have a significant increase on their potential business interruption claim. So that's correct. So on this graph we're talking about monthly production. And so here is their production history in kilograms there. You can see just following the graph there from the left, you can see in December 2022, there was a little bit of a reduction, evident probably for the Christmas period. Then if we follow that forward, you can see that actually it's relatively flat, this graph, in terms of the expected. And then we come to the month of the incident in December 23, and there's a significant reduction there in terms of production. But then afterwards in February, as they said, they increased production by incurring extra expense in terms of overtime. And so there's a significant amount of extra production, which probably almost offsets all of that reduction, given that you'd expect it to be a little bit lower based on December 22 during the holiday period, but there is a clear loss there in terms of production. From on the next graph, we have the revenue, and you can see actually it follows a very similar sort of pattern to the loss of production. However, it's worth noting that a loss in production doesn't necessarily directly relate to a loss of revenue, but it would depend on the insured itself and how they generate revenue, etc., and depends what they're actually producing. But in this instance, you can see, look, we've got that loss in December, but we have higher sales, but they aren't necessarily all, the higher sales aren't potentially all in February, but over February, March, and April, it seems they're slightly kind of a longer period there in terms of makeup, or in terms of when the actual sales are recognized within the monthly profit and loss accounts. So in terms of this then, so in terms of summary here, the insured managed to make up some of their lost production and their loss of revenue by incurring additional overtime. So that they did in fact actually had a small loss of profit, but most of the claim itself was extra expense and costs for the overtime. And they were able to demonstrate this by the documents they provided, and the timely provision of those documents as well. Kirsten, Simon, do you have anything to kind of add on in terms of manufacturing losses or in terms of extra expense there?
I think you covered everything lovely there.
All right, so we're going to talk a little bit now about, obviously, the insured's been panicked for the immediate incident. Then the reality setting in of, oh no, maybe we've lost some money out of this, as well as the length of time that these longitudinal pieces of the claim start to roll up for the insured. So how do you manage those concerns and expectations from the insured's point of view? And we're going to kick off with Kirsten here.
Thank you, Simon. So as Simon mentioned, the insured or policyholder is coming off the back of a very heightened emotional period of time where their business has unfortunately suffered a cyber event, and there's probably fires being put out in all different directions there. When it comes to BI losses, of course, they want their money back as quickly and efficiently as possible. They want to put their business back to full balance sheets, etc., and make sure everything's fully back up and running. So we fully appreciate that, and we try our best to keep an open dialogue, keep an open line of communication. Whilst it's very difficult to establish timelines in terms of when we can get that information back to them, just for the purposes of today, we would ask that information, or Joe would ask for that information from a policyholder. That all depends how quickly can they get that back to Joe, then how quickly can Joe and his team review that to then send back to Cowbell for us to review, for us to then have that conversation with the insured. It's not a case of this can all happen between a Monday and a Friday. We need some time to review all that information, and we like to keep an open communication between our insured and our broker to let them know at each stage, okay, here's where we are in the process, here's what we're further considering, here's how long it potentially will take for us to look at this particular section, or we're just trying to keep that open dialogue there. If we can establish timelines, we of course will. It's very difficult when it comes to these particular instances. There might also be situations where if we bring Joe and his team in right as we're going through that forensic stage of things, the insured might not fully understand the full extent of what their BI losses are. They might still be in that period of just coming out of their systems being down and still trying to get everything fully back up and running, or there might be some kind of long-term effects from a reputational perspective, or just some other systems that aren't fully back up in line yet. So there's a lot of different factors at play here. And for us, it can be very tricky, like I say, to establish a kind of formal timeline. but all we do is do our best to have an open communication and all parties stay very closely involved. So myself and Joe would work very closely together to keep each other appraised on how our analysis is going, as well as then communicating that to the broker and the insured. And that's all that we can really do at that point. I appreciate it is still very frustrating for a lot of policyholders. They just want their money, they want to forget the incident ever happened and move on with their life. So we fully appreciate that, and we do what we can to get everything wrapped up as quickly as possible.
So from my side, some of the concerns and challenges, I mean, it's probably dittoing what you said, Kirsten, but is managing expectation. That's one of the key bits. So it's early involvement of us and direct communication with all parties. So broker, insured, and insurers or Kirsten. Keeping that open dialogue is really important. Claim presentation. So when we request information, it's the timely request and presentation of that documentation. So we aim to turn around as quickly as possible, but there's obviously there's a time element there as well. But it really much is in the insurer's hand and when they can provide us with that information, fully appreciating that sometimes they're going through this loss period or whatever, or they're having to meet certain things, and additional pressure of providing us information can seem quite a stretch sometimes. So it is, we work closely with them to understand what is available, what documents are available, not producing unnecessary requests, but just the right requests so that we can satisfy ourselves and give Kirsten reasonable comfort in terms of the adjustment. In terms of the period of recovery, that's always an element there in terms of the period of restoration, that we want to reduce that as down as low as possible, really. Every time the insured isn't producing or generating revenue, that's an increase in the business interruption. So we're working with them to help them reduce any period of loss there as well. I think for us as well, in terms of the analysis, is understanding the business. So any revenue, any trends of that business, so growth year on year, or has anything happened? Equally, we've got external factors that might affect the business in terms of trends. One big factor that is hopefully in the far distance now is COVID. So when you have a big event like that, you've got external factors there. Other things might be, I don't know, war or increase or inflation as well. So it really depends. Some of those external factors can have a big effect on a business. In fact, that's probably a presentation for a whole nother time. In terms of makeup lost sales, so okay, you've got the loss period, but after that loss period, as we saw in the example of manufacturing, can they produce or increase that production or increase those sales to mitigate any of their sales loss after the period of recovery? And then finally, one big one for the insured, which we're fully aware of, is the potential reputational damage to the insured, which can actually have a big impact on the business interruption. And so it's managing that in an appropriate way to help limit any reputational damage.
So we've heard a lot about business interruption, but as we get some questions in from the team, please feel free to use the Q&A or the chat box for those. Hopefully, you now feel that you are comfortable in explaining how business interruption coverage applies to the types of incidents and claims that you might arise. And you should be able to describe the typical process that folks like Kirsten and Joe go through when they're examining these losses, and summarize the factors that affect the calculation of business interruption and extra expense. I do have one question that came in to me directly. I've got two. Sorry about that. First one, Kirsten, maybe you can help us with this. Is there any confusion between business interruption on property versus cyber?
Yes, there is. So under a traditional property policy or even some general liability policies, there tends to be some form of coverage for physical hardware. And I think what's sort of, if you haven't dealt with a cyber claim before, what can be misleading is that some policyholders or companies believe that if a cyber event happens, that their property policy will cover it. There are some situations where a property policy will have some form of coverage for a property hardware damage to some extent, and there might be some loopholes in how that is worded. But ultimately, property perils, i.e., the trigger to their loss, is something physical like fire, flood, physical damage to the actual device itself. Whereas a cyber incident is more that unauthorized access, the actually intrusion of the network. So a traditional standalone cyber policy is what ultimately covers that and fully encapsulates those types of incidents. There might be very limited scope of a coverage available under a property policy, but it wouldn't be fully extensive. And unfortunately, there would be a lot of cost there that wouldn't fall for cover. And I think you would need to have quite a savvy broker who could really read between the lines of a policy wording to try and make it fit there.
And we've got one interesting question here. How do you approach or adjust claims for overtime? Do you require policyholders to have an overtime policy or proof that they will in fact have overtime expenses? Joe, can you maybe opine a little on that?
Yeah, so I'll leave Kirsten to answer in terms of policy, in terms of extra expense shortly, but in terms of how you calculate overtime, so there's no set way. Really, it is depending on the support available by the insured, which is difficult. And we're working with them to understand what documents are available. But within the instant, you'll have some sort of overtime. You might have pay slips of specific employees of specific they've never done overtime, so you might have their pay slip that will demonstrate that it was overtime due to a specific reason. Or you might have external contractors that you have support in terms of invoices. Obviously, anything with personal names needs to be redacted, but at least that is some form of support. The other way to look at this as well is if you've got a business that normally has overtime, and in this instance does significantly increased overtime, then you can compare the prior period, maybe that's a prior year, maybe it's a prior month, to the overtime that was done in the loss period. And then the difference supports the fact of the increased overtime, which is due to the loss. Obviously, we need to understand what that overtime is for, what's happened, what was that employee doing. But there's some kind of approaches when it comes to overtime in terms of how we might quantify that. I'll hand over to you, Kirsten, in terms of the policy approach.
Thank you, Joe. So as Joe was saying there, in terms of what the employee has actually done, so we need to make sure that in line with the policy for Cowbell specifically and many other insurers in the market, and this is where policy wordings vary ever so slightly. Some policies might cover just overtime and some exclude salary costs. Ultimately, if you have salaried employees who aren't able to work due to systems being down, that's considered as idle time, but it's not actually an additional expenditure to the business. There are some policies that will pick that cost up, or some that exclude it and only focus on overtime. But if we're looking solely at the overtime portion, we need to make sure that it's not just sort of common for all employees in the business to work overtime. So we see that a lot in professional service firms, where it's quite common for employees, let's just say they do 10 hours of overtime per month. If we then come to adjust a claim, we would ask for some kind of supporting documentation to show maybe some prior overtime documentation, whether that be pay slips or some kind of accounting software that they log, so that we can make sure that it is actually as a result of the incident and can correlate back, and then would fall in line for the coverage under the policy. Equally, what we would be looking at is just some form of description of, is the employee been doing sort of additional IT, is it the IT team who've done additional works in the IT department, or is it maybe employees elsewhere in the business who've had to then work overtime once the systems are back up and running to get everything up to date or manually input that data. So those are sort of key pieces that we would work very closely with Joe. Joe would look over the actual figures and the full adjustment, whereas we're more concerned around, well, what does this all relate to and why is it in direct correlation to the incident?
Another question we've had, and this is an interesting one. How does the insurer confirm the insured has kept to policy warranties when it comes to business interruption? Now, I'll preface this by saying, every policy has its own warranties, right? Not every policy has warranties on everything. But I would imagine this is referring to something like an MFA warranty if a policy had that wording or something similar. So how do you make sure that an insured has kept to what they warranted they will keep to?
Yep, so we would just review that similar to anything that's in addition to the policy, any stipulations that are in there, we would just review the policy documentation and ultimately majority of time you're reliant upon the insured's confirmation that something has been put into place or if they can provide some form of supporting documentation. Just in very simple terms, let's say we've had a ransomware incident come in and it's as a result of not having multi-factor authentication come in, but that was a stipulation that we made under the policy or some kind of agreement that the insured said they already had in place or some kind of order or something along those lines. There's either a way that it's evidently clear that it wasn't in place, hasn't been put in place, or sometimes we'll just have to communicate with the insured and ultimately rely upon what they're telling us.
And I just want to preface this by saying not every application's a warranty, not every proposal form is
Yeah.
a warranty, not every answer is a warranty, not every answer is a misrepresentation, but sometimes they are. It's all dependent on circumstance, right? And what the
Yeah.
policy wording says when it comes to that. Two more questions, and I think we've got time for both. Are there any industries more exposed to extra expense than others?
I'll have to say that one. So in terms of that, in terms of quantum, and from what I've seen, no, there's no industry specific. It depends on the loss, depends on the insured themselves, and depends what can be done in order to mitigate any revenue losses. So I've seen it from a range of different industries, and there's not been a specific one where you've had a specific cost. Obviously, when you talk about production, as we mentioned, over time might be considered more, but equally you might have overtime for a retail business to I don't know, data entry, for example. So no, there is no specific rule or hard rule in terms of that.
And
Oops, sorry.
And I think for our last question that we've had so far, it's a little bit more general. Is AI progressing in the way that it is? Everyone's talking about AI and what it can do for us. Will this have an impact on cyber insurance going forward? And what are you guys, are you willing to opine on that particular topic, given how new AI is?
I think, Simon, you're probably the technical wizard here. I think, personally speaking, AI has a lot of positive and negative connotation. Just like anything in life, as the internet took off, I'm sure there was a lot of people believing that it was going to have a lot of detrimental effects. But ultimately, here we all are now on laptops with smartphones, etc. So I think that it has a lot of advancements and can massively help out. But then equally, probably seen in the news all these deep fakes, etc., that are going on. So it's becoming increasingly difficult for people to be very cyber aware, which leads to more cyber claims.
I will say from a technology perspective, it depends because there's only a few major players in the AI space, right? So you've got OpenAI, you've got Google with Gemini, you've got Microsoft with Copilot, and depending on what website you're on, if you're on a travel website, for example, you're somewhere and you're talking to an AI, generative AI chatbot to do something, the chances are it's probably powered by one of those major providers, OpenAI, um, Google, etc. So you've got to think, if those go down, which ChatGPT was just down because of a Cloudflare outage, does that mean that your website can no longer send the requests of its users to the generative AI in the background? If we're all using the same generative AI companies, most SME businesses aren't spinning up their own large language models and creating their own from scratch generative AI transforming technology. So if you're going to rely on someone else's tool, is that going to create a BI loss for you? I would say it does, but then what do the terms and conditions say about limiting that loss? And what's the ability to claim back on that loss? I think it's a big area, especially as we become reliant on two or three major providers in the space. And the last question that I do see, which came in more, have you seen claims for additional borrowing costs? Seeing more often policyholders are drawing down funds from loan facilities to pay suppliers. So is that loan cost of the loan part of a claimable expense?
Yeah, so I have seen that fairly often. I actually had a claim not too long ago of a similar nature where policyholder's payment card processor had blocked payments because of a fraudulent transaction. They then had to switch over to another provider at an additional cost, and that interest level there, they didn't get as much back from the payment processing. That would fall for coverage. When it comes to additional borrowing, again, I think we would have to know the sort of patterns and behavior of an insured. So if this is something that they do on a regular basis because their cash flow margins are quite tight, then it's maybe not something that we would consider relate solely to the cyber event. But again, each claim is kind of taken on their own merit, and we would just look to fully understand why have you had to take out a loan with this interest, etc. Is it purely this is the sort of first time that you've had to do it because systems were down and you had to pay invoices or pay staff or whatever it might be? Then I think we can consider it, but it would be on a case by case basis, and we'd really need to understand why that is necessary. Sorry, that's not
Mhm.
a great answer there, but it is just
Actually, I think it is a great answer because you said it's
Yeah.
not completely excluded. It just if this is clearly correlatable to the event,
yeah.
then we will look at it for coverage. I mean,
Yeah.
that's a great answer.
I think also just to add is in terms of our role, we're here to help the insured and to try and get them or to process the recovery for them, or with both for the insurer and the insured to get them a potential payment on account or whatever as soon as possible. And so in some instances, if we've done all we can in trying to get the documents there as well, we're trying to expedite that so they shouldn't need to borrow additional funds. I know it's unavoidable sometimes, and as you say, it is depending on the claim, but we're here to help and speed up that process and have that discussion with them, but also relay that to Kirsten and our team.
And
Um,
just, sorry.
sorry, yeah, in terms of a payment account, to get the insured some funds essentially.
Yeah, no, of course, just to kind of circle back to what Joe was saying there, if we get to a stage, and we have seen this quite often, where a policyholder might have multiple different locations, and let's just say 2 out of the 5 locations have provided all of the data that we need, we wouldn't hold back on making that payment on account to give the insured some cash flow. If we are fully established and getting to a certain point and we have enough documentation to support a certain value, we're happy to make that payment to the insured while we continue to evaluate the rest. So we would like to think it wasn't 100% necessary, but like I say, we can consider it on a case by case basis, just depending on why and how it's all come around.
And with a minute to go, I'd like to say thank you to everyone for attending and thank you to MGA for the opportunity. I think this has been a great conversation. Hopefully you feel the same way. And MGA, I believe, will give us some instructions on maybe post feedback and getting some so we could make future presentations even better. Thanks so much, everybody.
Thank you.
Thank you.